Hey, good morning, everybody. Happy Friday. How's everyone doing? Hey, Erla. Nice to see you. Guys, great to have you here today. Good morning, Hamid. Pinieski. I will be in Yellowstone all week. I fly into Idaho Falls, Idaho on Sunday, and we're going to spend a week up at a cabin in the woods. Should be a good time. And on that note, John Novak will have the room next week, guys, all week. So he will cover basics the same way I cover basics every day, but he's also going to take you a little next level. And that's kind of one of the things that John Novak excels at, is being able to get more out of the software once you do understand the basics. So next week will be exciting. I'm always excited when you guys get him. And it's rare that you get him for a week. I don't think John Novak has taught an entire week in about 3 years, so this is pretty cool. Wear them out, guys. Let's go through, check news. We had a little 8:30 news, the core PCE price index. It did make the market bump a little bit. It spiked. Hey, good morning, Zorro. Guys, at 10 a.m. we have the revised University of Michigan Consumer Sentiment. It is a medium impact news, and it has the potential to move the market. It has the potential to create an untradeable bounce or change direction or just trade too fast to keep up with. So every morning I check news. Every morning I do it not because I care anything about what it says the news is about, but rather the impact that it may have on the market. So that's the first thing I do, guys. That's one of my routines every morning. Cup of coffee, check the news. And then everything that I'm going to talk about today is going to come from the nexgent3.com page, specifically under education and trading guide, guys. This is where all the answers come from. This is where all the rules are covered. This is where you can find everything that you need. True story, everything that you need. But we keep it very focused for the first hour here. And I'm going to go to the glossary of common terms the same way I do every day, because I want you guys to have this so ingrained in your brain that this is your first trade, that this is your best trade initially, that this is the most important thing you can do for your trading journey, guys. That was happy but never satisfied syndrome. So the first thing would be to make sure that nobody switched your coffee to decaf, because I just highlighted the wrong one. I saw the H and went with it. But happy but never satisfied. That's my brother. Always looking for a better way. Guys, we're going to talk about a high probability trade. That's kind of funny that I did that. We're going to spend an hour focused on this high probability trend trade. We're going to break it down. I'm going to teach you how to study it. We're going to talk about advantages, how to recognize them, what they mean to you. And guys, the high probability trades are trades where each indicator on every chart agrees for the rules of the trade. And typically, this is when the triggers are their strongest. This is when there's no termination conditions and just no trouble spots between you and your target, guys. This is the best of the best. This is the first trade that I teach. It's not the only trade, just the first trade. And I do this because this is a trade that typically wins 70 to 80% of the time, guys. And that win percentage, that success breeds confidence. And confidence creates trust. And guys, once you have trust, entering the market becomes easy. Recognizing becomes easy. But the most important skill that this trade's going to give you outside of that consistency is simply it's going to teach you to read your charts. Excuse me. It's going to teach you to look at your indicators, recognize advantages, and those advantages are going to let you know that your rules are met. I had this conversation with a friend of mine last night and a little bit this morning. 90% of your day, guys, is doing nothing. 90% of your day is sitting on your hands. 90% of your day isn't being active, but rather it's being very passive and waiting for advantages to come into play so that you can embrace the 10%. That 10% is trading, is being active. It's seeing these advantages and entering the market. And guys, patience is probably one of the hardest things, and it's a thing that I can't teach. But the more you trust your rules, the easier patience becomes. The easier it is to wait. when you focus on the process, the rules being met, rather than the money that you're trying to make, it becomes easier. And you will get to the point, guys, once you're reading your indicators, once you're reading your charts, you're going to know and you're going to understand where the market is likely to continue. Hey, good morning, Wayne. You're going to understand where it's likely to go, and you're going to understand where it's likely to stop, guys. And these chart reads are going to find their way into everything you do every day. We're about to build a very solid foundation. That's all we're doing, guys. We're in elementary school right now. We're in kindergarten. If you're brand new, you're probably going to take a nap and eat a little paste while we go through this first hour. That's okay. But we're going to keep it very simple. I'm only going to talk about 3 rules. Each rule for this high probability trend trade, guys, creates an advantage. It's the advantages that create a trade. So if we're putting together an equation, a trade equals momentum plus a clear path plus an entry area. This is what it takes to enter the high probability trend trade. Once you understand momentum, guys, this is your 5-minute lesson. This is the easiest lesson that you'll ever get. Once you understand momentum, you're going to work on a clear path. Making sure that you're not trading into those areas that have the potential to stop the market. Once you understand these first 2 advantages given to you through the first 2 rules, it's going to open every door that you need open, guys. It is going to set you up to see more, to do more, to catch more, to profit on more opportunity. Initially, your 3rd rule will be the entry for the high probability trend trade. You're going to pinpoint exactly where the market is most likely to continue. You're going to do that because you have the advantage of momentum and a clear path. These 3 rules happen on only 2 charts. Even more specifically, guys, the first bar on your large chart is going to define the direction, the momentum, and the areas. And I need you to allow it to define the direction, the momentum, and the areas. Don't get hung up on other charts, other ideas. Keep it very, very simple, guys. Your first 2 rules, the ones that give you momentum and a clear path, happen on the large chart. More specifically, the most current bar on the large chart, guys. But once these rules are true, once they're in place, once those advantages are present, you're going to go to a smaller, faster chart. And this is a refinement chart. It takes this very broad stroke of a brush and it breaks it down into about 20 to 30 bars. And it's this refinement process. Let me show you a picture of it. Inside the 1 bar on the large chart, the refinement process allows you to see a pullback, an entry, and then progression in the direction of your trend. All of this inside of the black box happens inside of 1 bar on the large chart. So it's this refinement process on the smaller, faster chart that's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And great entries create very manageable trades, guys. So rule number 3 is just a way to capitalize on the advantages that the large chart gives you. We do that because there are forces in the market that are not us. They're bigger than us, they're stronger than us, they have more money than us, they're probably better looking than us, guys. The large crowd leads the way. The large crowd is the big chart. And you have to ask yourself, who am I trading with? Who am I trading against, guys? The large crowd is going to define the direction of the market. If they want it to go up, you better believe it's going up. And they're going to establish the momentum that we need for advantage number 1. And they're also going to react to key areas on a large chart. And that's how you're going to understand where the market is likely to continue, where the market is likely to go, where the market is likely to stop. The large crowd leads the way. And then the small chart's a representation of the small crowd. These guys still have a lot of money, a lot of influence, and they can create little pushbacks, little retracements, counter to the underlying trend that the large crowd has created. The small crowd fails, typically 70 to 80% of the time. Rule number 3 for the high probability trend trade is designed to have you pinpointing their failure. And because they lose 70 to 80% of the time against the large crowd, much like you would, we can win up to 70 to 80% of the time by taking that highest probability trend trade from the correct spot. So this is what we're going to focus on. 3 rules, 2 charts. And guys, you got to learn the rules. Learn the trigger line and Fibonacci rules for when it's okay to trade. Understand what it looks like to have these advantages. Understand what it looks like to have these advantages, and really focus on the language of the rules so that you can be consistent. Simulate, practice. Guys, get in there and mess stuff up. It's okay. And don't just simulate on NinjaTrader. Those of you that are new to it, practice scaling your charts and entering trades and exiting trades and moving stops, guys, and get the mechanics down. But every trade that you take, every question that you have, guys, post it in the room. Post that picture in the room. Tell me what you saw. Tell me why you did what you did. Because when you annotate a chart, when you go through and talk about, hey, Mark, I saw momentum, and this is what my path looked like, and this is where I entered. Every time you do this into the room, guys, what you're doing is, one, you're associating the advantages with the look, so you're creating a connection there with the rules. Use the language of the rules. But you're also telling me how you're reading your charts. And my job is to make it so that you can read these indicators. So you have to tell me what you see. And every time you post in the room, guys, it is a private session. You and I are looking at your charts. We're talking about what you said. We're analyzing your reads, your entries, your exits, and we're just looking for a way to do it better together. So posting your trades in the class is really the first step in becoming a confident trader. One of the annoying traits that I have is if you show me 5 charts, and I promise you, you show me 5 charts with annotations on them, I'll pinpoint exactly where your challenges are and where your strengths are. We'll embrace the strengths and address the challenges and move you to that next level, guys. That's one of the reasons they give me the microphone here. We're going to simplify. We're going to keep it so basic. I'm going to tell you guys to ignore things every now and then. I'm going to tell you that it doesn't matter. Don't get upset. You engineers, don't get upset. We're going to simplify. We're going to talk about the highest probability trend trade that you can take. We're going to lay this super solid foundation together. And then that trade is going to take you to the second trade that I teach you, which is what we call a medium probability trade. And of course, there's definitions, right? If a high probability trade has each indicator on every chart agreeing for the trade, well, a medium probability trade is when most indicators line up for the trade, however a small issue exists. And I want you guys to realize that issue is singular. We're not going to compound problems, guys. There's just no reason to risk it. But this will be the vast majority of your trades. Most of your trades will be medium probability trades, which means you've got to manage them a little assertively. Your ability to read charts will do that. Your ability to read charts will recognize the trouble. Your ability to read charts will get you in a position to take quick profits, get to a zero loss. So let the high probability lead the way, guys. It will carry you to the second trade, but you've got to learn the looks so that they become easy. And this is the part that everybody hates, because this is the work, guys. In learning the looks, the best way to do it isn't to keep taking trades. The best way to do it is to set a little time aside and take a lot of pictures, guys. Go back and take pictures of the looks. Commit them to looks. Write on your chart what the look is and what it means to you. And that goes to the second thing. Track your real-time performance in the spreadsheet. So this spreadsheet used to just be a trade tracking guide. That was it. It was one page. Every time you take a trade, you put it in there. You talk about what happened, what kind of trade it was. Did you win? Did you lose? I've altered it a lot over the last couple years, guys. Now you're going to put all your trades in here, but there's a giant section on the feedback from class, because I promise you, if you listen to the feedback, you will be better tomorrow, without a doubt. There's links how to paste in your spreadsheet, how to annotate your charts to get good fast, right? And all of this is great unless you ignore it, unless you take these pictures and never talk about them again, guys. And that's not the way to do it. You need to take the pictures, to put them in, and then tomorrow morning or Monday morning, I guess it's Friday, go back and look at the pictures. What did you do yesterday that worked? What did you do yesterday that didn't work? What felt easy? What felt forced? And guys, what was the feedback on your trades? And this little historical study each morning, it will prepare you for the day. It will accelerate the learning. I've watched it happen 1,000 times over. Again, taking pictures, not trades, is going to get you to where you want to be faster. So the second tab of the spreadsheet is the 101 tab, guys. This is the rules for the high probability trend trade in green. This is exactly what they look like, and there's annotations telling you why the rules are met, what the advantage is, what rule it pertains to, and I've done an awful lot of work for you guys here. It's going to be up to you to come in behind me and keep filling out this spreadsheet, keep committing these looks to memory. And then the red section is what it looks like to not have your rules met. To be trading without the advantage of momentum, to be trading into an area that's likely to stop the market. Know both sides of the coin so you know what to embrace and what to avoid. The third tab is where you're going to build your plan. In the very beginning, I'm going to hand you the most basic plan. And that plan is designed to optimize your chances of success with the high probability trend trade. You're going to create a plan. Once you understand that trade, guys, you're going to see patterns and opportunities all over the place. There's ideas on management, patterns that repeat themselves, termination conditions. And your goal should be to make your favorite look section look like the one that I've put together, guys. This is entries for high probability trend trades, management. Almost 400 pictures of you guys being brilliant, embracing momentum and clear path, and finding those great entries. Patterns that repeat themselves that you will begin to recognize. Here's a lot of cheat sheet for you, and a bit on termination conditions as well, guys. Make your section look like the one that I built, and the looks will become easy. They'll become very apparent to you, and the market will almost slow down once you commit these to memory. So we're going to get going, and we're going to talk about these three rules, and we're going to talk about the advantages. Multiple power hits. Ninja won't stay open. Man, I'm sorry. John had the same thing. John's got no internet right now. Kind of a bummer. I'm going to show you guys this one. So John's house is on the bay. His boat took a header last night, went nose in. He was sending me videos. The water had come up over the retaining wall, was like 10 feet from his house. So you guys on the East Coast, stay safe. Enjoy your weekend run. I'll see you in a week. You'll see me in sometime around the 6th. I'm going full offline. Guys, large chart leads the way. Write it on a piece of paper. Go to Etsy. Get a coffee mug made with large chart leads the way on it, because the large chart defines momentum, guys, and it does it through strong triggers. This is rule number 1. And it's pretty easy to pick out. When the background is green on the large chart, the trend is up. Look for rules to be met for high probability trend trades long. When the background on the large chart is red, the market is going down. Look for rules to be met for high probability trend trade short. That's the easiest lesson for everybody. And then strong triggers in an uptrend means that the small triggers, the solid lines, are above the large triggers, the dashed lines. There is literally space in between the two, and that gap between small and large says that the odds are favorable for the market to continue up. Strong triggers is one look on every chart, guys. Separation between the small and the large. Everything is up, wide. This is strong triggers. The odds are favorable for the market to continue up. In a downtrend, small triggers are below the large triggers. Large triggers are wide. Space between the two. The space lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is our battle cry. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum can actually break those key Fibonacci areas. And odds favorable momentum is going to cover a lot of the mistakes that we tend to make as new users. And when we have that strong trigger look, those odds favorable momentum, guys, you're going to buy Fibonacci support on that smaller, faster chart, or you're going to sell Fibonacci resistance on that smaller, faster chart. Your large chart, the 1 bar, looks like it sprouted a tail. You're going to pinpoint on that refinement chart exactly where this tail is most likely to form, whether it's a long trade or a short trade, guys. So the large chart leads the way. Strong triggers. Let's see if I have a strong trigger look on my chart. Separation between the small and the large, and the market pushes down. Separation between the small and the large, the market pushes up. This is only 1/3 of your advantages, guys, but you can see strength pushes the market. Weakness, right on that first bar, guys, we're seeing a retracement with those weak trigger lines. So rule number one sets the tone. And rule number one isn't difficult to see. On the most current bar, there has to be space between the triggers. Picture scissors that have opened, ready to cut. Well, when your scissors close, when the small triggers work their way back inside of the large triggers, guys, this is a weakening of the large triggers. Anything can happen up or down. So we go from strong to weak. We go from odds favorable to anything can happen, guys. And I want you to embrace the language a little bit. I want you to say to yourself, man, I don't want to risk my money if anything can happen. Or I'm excited to enter this trade when the odds are favorable for the market to continue. And one of the things that you'll find, I'm just going to pull out all the pictures today because it's Friday, is that it goes all throughout the day. Strength, weakness, on, off, over and over. Guys, 90% of your day is waiting. So you may have strength that turns into weakness, and then you see a reversal. And that reversal creates the momentum. There's one of those tails, potential entry to go long. And then eventually it weakens again, those anything can happen triggers, and we see another reversal. That reversal creates strength going the other direction. Maybe you guys find a way to capitalize. And then eventually we get a transition where there's no agreement. The smalls are up and the large are down, and that can't ever be strong triggers. And the triggers are red, but the background is green, and that can't ever be strong triggers. And guys, this is where people are tempted to predict what the market will do rather than wait for rule number one. This is a fight between the buyers and sellers. Both sides of the large crowd are duking it out 100%. And if you just sit on the sidelines for a little bit, somebody's going to win. Somebody's going to put that advantage back on the table. So is everybody good? Can you give me a why in the room if you're comfortable with this? Strength, weakness. Advantage, disadvantage. Pretty simple, right? Once you have momentum, guys, you're doing 100 miles an hour down the highway. We want to make sure you're not driving into a brick wall. Termination conditions false, guys. And when there's none of those areas that may stop the market in front of you, you're going to have room to your profit targets. We're going to try not to be so wordy, and we're going to call it a clear path, guys. And on your large chart, these lines are where the large crowd make decisions. These lines are where the large crowd reacts. These lines are where buyers buy and where sellers sell, where profits are taken, where bounces happen. You don't have to know how they're formed, but be able to identify them. Divergence high is a magenta line that prints off of a pivot if there's a loss of momentum. Divergence low is a cyan line that prints off of a pivot if there's a loss of momentum. Fibonacci resistance, when the market is trending up, this may create a bounce, stop it, reverse it completely. Fibonacci support, when the market is trending down, this is a point where the market may stop, bounce, or reverse completely. And then these yellow one-to-ones, guys, these are fibs in the moment. If the market's trending down, they can behave as support, and if the market's trending up, they can behave as resistance. But what I want you to really focus on, horizontal lines on the large chart can stop the market. That's it. Easiest phrase ever. How do I know if they're likely to do that? Well, I let the large crowd get there. I let the large crowd push the market up until my dynamic Renko bars hit that area of resistance. And once they do, here's my question. Where are my triggers? Are my triggers below? Are they breaking through? Are they above? And guys, every time you hit a line, chances are triggers are going to be below. And if they're below, this area may reverse the market. It may create an untradeable bounce. There might be a huge fight. The large crowd does not send out a memo in the morning letting you know where they're going to reverse. And guys, triggers below, no more trades into that line. Sellers take over, push it down, hit that blue fib, hit that divergence low, hit those yellow one-to-ones. All you have to do is ask yourself, where are my triggers? If my triggers remain above that Fibonacci support, this area may stop the market. It may create an untradeable bounce. Hell, it might even reverse the market. No more trades into that area. And guys, I'm telling you, once you open up a chart, you will begin to believe in rule number 2. Scroll back, take pictures. Resistance No triggers through. Stop the market. Support. No triggers through. Stopped it. Oh my gosh. How many times can rule number 2 keep you out of trouble? Guys, this is an itty bitty snippet. But do you see it? 90% of your day is just relaxing, hanging out, waiting, doing nothing. Let's get those advantages in place. Look at the big untradeable bounce. Look at how support holds. Look at how resistance held with all the triggers below. I mean, my goodness. Over and over, guys. So this is the first part of learning how to identify, is making sure you know when not to trade into an area. Areas break all the time. The market pushes through. Guys, the large crowd, especially with momentum, gets to the other side of lines. When your small triggers, both lines, and the large triggers, both lines, get below support, support behaves as resistance. Guys, the area is broken, the path is clear until I reach the next area. When the small triggers and the large triggers get above resistance, resistance is broken, it behaves as support, the path is clear until I reach the next area. Doing what you'll be doing a lot of, sitting on your hands, large charts are wonky. There's just no reason. No reason to hope. Guys, you know exactly what it looks like when it's broken. So let's go back to the large chart again, just for grins. Once the small triggers and the large triggers get above the area, guys, your path is clear right until you hit the next area. And once the small triggers and the large triggers get above resistance, it behaves as support. And the path is clear until you hit the next area. Not losing your butt on a Friday, Jen? I don't blame you. It's no fun to lose your butt. And guys, one of the things is that most losses are avoidable losses. Most losses can be avoided through a very simple understanding of the rules. So I'm going to ask the class real quick. Is everybody okay with the idea? I want you to commit this phrase to memory. When price reaches a line and my triggers remain above support, no trades into that line. When price reaches resistance and the triggers remain below resistance, no trade into that line. Let me sit on my hands and let me wait for the area to break. Is everybody good with that? Hope so. When the small and the large get below the line, the area is broken. Let's look for rules to be met. Let's take some trades, guys. Same thing going the other direction. And one of the things that happens is you guys get excited. And you're like, oh, I can't wait to take this trade. And you trade directly into Fibonacci support, and it stops you out. And you're like, man, I had all the momentum in the world. Those sons of guns. Guys, trading away from fibs, creates a huge advantage. This is your 101, your remedial, your foundational, your high probability trend trade setup, guys. Hey, what's up, Rob? Understanding this look takes you to your second trade, your medium probability trade. And guys, this trade is called a 50-50 trade. And 50-50 has nothing to do with your odds of survival. 50-50 is a reference to where the trigger lines are. 50% break through the area. 50% are above. Yeah, Rob, we all have, man. We're going to make every mistake under the stars, guys, so we learn how to avoid it. When my small triggers absolutely smash through an area with odds favorable momentum, the key being momentum, this area has the potential to break. Guys, this area has the potential to break with odds favorable momentum in this trigger look. It is not broken until all the triggers get below. This is going to be your medium probability trade. And if you guys remember, a medium probability trade means that a small issue exists. Your issue is it's not a clear path. It's going to be medium probability. If I don't have a clear path, guys, I have to rely on momentum to break it. And I want a low risk entry. I will give you a plan to take these 50-50 trades. This will be your second trade. This will be the majority of your trades. But you've got to understand terminations and clear paths first so that you can find that magical spot in the middle where opportunity rears its ugly head, guys. So I'm going to ask again. You don't have to answer, but I'm going to ask all the time, guys. Give me a Y in the room if you're good. This is a very quick lesson. Price reaches an area. No triggers through, no trades. Sit on your hands. Do nothing. Small and large break. Yeehaw. Let's go. Clear path. Let's look for rules to be met. There's one of those tails. And then, guys, that will take you to the 50-50. That potential to break when the smalls smash through with odds favorable momentum, but the larger lagging behind a little bit. Most of your trades are going to look like that. There will be times when your path isn't clear because the areas are stacked, guys. There will be times where you're going to start to get frustrated. You're going to say to yourself, I'm never going to make money because there's so many damn lines on my chart, guys. It happens. Support to support to support, and I just can't seem to get a clear path. Guys, this 3 areas of heartbreak took 2.5 minutes. 2.5 minutes. Feels like an eternity if the market's going down without you. This is 90% of your day, guys. Pete said it in there, sitting on his hands. 90% of your day is just relaxing, doing nothing, playing solitaire, playing Scrabble, drawing, whatever. Guys, the futures market trades billions of dollars every day. Billions every day. It's not necessary to be in every move. Get yourself into the best moves. Get yourself into the highest probability moves. Get yourself into the moves that have the highest chance of success, guys. And once you understand rule number 2, you're going to understand that Fibonacci gives you the ability to see where the driving forces are likely to make decisions. You're going to know exactly where the market has the potential to stop. You're even going to understand where the market has the potential to go. 90% of your day is waiting for advantages, guys. 10% is based on trading. And it's crazy because what you find once you begin to trust this a little bit, once you start focusing on momentum and a clear path, is that there always seems to be another trade. There always seems to be another trade, guys. I've never seen the market flatline. Even when crude oil hit 0 years ago, it still bounced and there was opportunity soon after. So learn patience, guys. Momentum leads the way. It breaks areas, it pushes a market, it covers mistakes. Clear path means that there's room to your targets. And really, that's what we want, guys. We want to get paid. And then once I have these, all we really have to do is figure out where that small crowd's most likely to fail. So we're going to turn our attention to the small chart. And then we see the one time, the only time that the small chart tells me that I can't take a trade because the rules aren't met, guys. And that is when 3 divergences print in the same location. This may terminate the trend. This becomes an area likely to stop the market. 3 losses of momentum in the same range may terminate the market. It becomes even more powerful with those weak anything can happen triggers. And it becomes more powerful still if the final pivot is higher than the previous from a low or lower than the previous from a high. So guys, if you come to the small chart, you're excited about your entry, but you notice 3 divergences, you have to pump the brakes. Rule number 2 is not met. That is no longer a clear path. And your small chart's going to show you the change that you can't see in time on the large chart. That's why it's the only termination condition on the small chart. But if it's not there, we're going to define our entry point. We're going to define the point where the market is most likely to continue, where the small crowd is most likely to fail. And we're going to do it at such a level of precision that you're going to use a limit order. You're going to wait for the market to come to you at an area inside of favorable large triggers. You're going to buy or sell one of those little pullbacks at an area inside of triggers, guys, inside of favorable large triggers in the beginning. Because favorable large triggers create the highest chance of success. Favorable large triggers create the least amount of risk. Favorable large triggers make it easiest to pinpoint where the market is most likely to continue. Because guys, one of the gospel truths in the market is that price returns to large triggers. You'll see it all day long. It pulls away and it returns to large triggers, and it pulls away and it returns to large triggers. This happens on the large chart, and guys, this happens on the small chart. So what we did is we took the large chart large triggers and put them on the small chart, and we call them synthetic triggers, and they look a little stepped here. So every time price pulls away from triggers, it's likely to return to the large triggers, both on the large chart and the small chart. So when those trigger lines are overlapping, one on top of the other, you've taken 2 correction points and created 1. And then when you shoehorn some lines in there, fibs, midbands, yellow 1-to-1s, you give the market something to bounce off of. And guys, this is how we pinpoint our entries. This is how we get into the market. So the small chart may return to the large triggers. And inside of those large triggers, I have 1-to-1s and I have a fib, and both of these areas can produce a bounce. But the large chart may come back to the synthetic triggers. And the synthetic triggers have a midband inside, and that may create a bounce. And the reality is, guys, is I don't know where it's going to happen inside of these triggers specifically, but I know exactly where my highest chance of success comes from areas inside of triggers, guys. And this is how we create the window where the market is most likely to continue. This is how you're going to define your entries. When the large chart says up, when the large chart has odds favorable momentum, when the large chart has a clear path, your small chart will be absolutely railing to the upside. And that fear of missing out is real, guys. That fear that the market's going without you, that you're not going to get paid, that this is horrible and I'm going to live under a bridge and eat beans with a stick, right? And then the small crowd fights and you get the reversal bar, that down bar after all of these up bars. Guys, this is not your entry. Rather, this signals the beginning of the pullback. This shows you the beginning of the fight that the small crowd's putting on. So at the time of the reversal bar, find your trigger lines. Price bars are likely to return to triggers. Draw a circle around them. Put a box around them. This is where price may return. But then find the areas inside. Fibs, midbands, and yellow 1-to-1s, because these are exactly what I expect to create a bounce. And I'm going to create a window from the highest point of support to the lowest point of support. And this blue box signifies where the small crowd is most likely to fail, where the market is most likely to continue with the trend. Because of the advantages, you like that one, Zero Bot? Because of the advantages on the large chart, because of the momentum, because of the clear path, your job is to activate a limit order a couple ticks above that highest point of support. And if the small crowd has it in them to get to your entry, ladies and gentlemen, you are in the highest probability trend trade that you can take. Because you understand where the market is most likely to continue, because you're learning the lesson that price is likely to return to the triggers and bounce off of areas, any line, any fib, any midband, any 1-to-1 on the wrong side of those triggers, below those triggers for a long trade, guys, this is outside of the window. This is not where I expect the market to continue. This is actually where I'm hoping the market doesn't go, because this is on the wrong side of everything. And once you get below those triggers, guys, there's no telling where the market will stop. So reversal bar, find your triggers. Once you locate your triggers, pinpoint your areas. Your order goes just above the highest point of support, closest to the reversal, guys. This is your entry for the highest probability trend trade long. For a short, everything says down. Rules are met on the large chart. Momentum, clear path. And you're going to wait for the reversal bar. Reversal bar signals the beginning of the pullback, so you identify your triggers from the lowest point to the highest point. This red box shows me where price bars may return. The area within shows me where it's most likely to bounce. And guys, if you have one area inside of favorable large triggers, your limit order will go a couple ticks below it. This becomes your entry for the highest probability trend trade. Things that don't concern me. If the small triggers turn against me, guys, that little loss of momentum is exactly what I need to get back to my best entry. If there's a divergence, a loss of momentum, doesn't phase me for a high probability trend trade. It takes 3 of these bad boys to ruin my good time. And guys, pinpoint where the market is most likely to continue. Make that your mission for a couple weeks. And what happens is you understand where the market shouldn't go. It shouldn't go beyond those triggers. Every line beyond those triggers is irrelevant to the entry for a high probability trend trade. And where the market should not go, generally 4 or 5 ticks above the trigger lines, guys, this is your first stop placement. This is where you're going to say, you know what, if the market blows through the triggers, if it blows through the areas, my advantage is gone, and I no longer want to be in this trade, guys. And great entries give you the least amount of risk. But I want you to be mindful and accept that your stop will get hit. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Small losses are a normal part of a positive equity curve. They are very much a cost of doing business. But the cool thing is with all those advantages, more often than not, you're going to get a reversal bar in the direction of your trend. We call this a confirmation bar. It's confirming the movement in the direction of the momentum, in the direction of the clear path. It's confirming the bounce off of the areas. And you'll actually be able to reduce your risk 2 ticks above or 2 ticks below. And it's not uncommon at all to see you guys take the perfect entries, to get that reversal bar, and then for whatever reason, it's one of the ones that fail. And you're out 30 or 40 bucks a contract rather than crazy stop placement, hoping the market decides to turn from beyond the trigger line. So great entries create manageable trades, guys. That's one of my favorite sayings. And that's it. That's the high probability trend trade, guys. That's 3 rules. Only 2 charts. And that's the best of the best, guys. The favorable large triggers, the odds favorable momentum, the clear path, that's the best of the best. That's your foundation trade. That's the one that's going to happen maybe 2 to 5 times a day. But it's not always going to be perfect. And that's what you guys have to realize. It's not always going to be favorable large triggers with 1 lines inside. Sometimes on your entry chart, your triggers are going to be what we call split. One trigger line is up here, and the small crowd or the small chart may return to these triggers, and your synthetics are all the way down here, and we know that the large chart may return down here. And guys, that is a huge gap with a lot of indecision. And then when you start looking at areas, well, now I've got a mid band all the way up here, and I've got Fibonacci support all the way down here. And guys, I know that my stop goes beyond the trigger lines. That's a lot of risk. Can everybody give me a why if you see how split triggers creates indecision, how it's not the perfect scenario for entry, how risk gets elevated? Because once you understand this, once you understand the concept that price may go here or here, that it may bounce here or here, this is where you can incorporate that reversal bar, that confirmation bar. And you can say to yourself, there's so much indecision, I'm going to force the market to go in the direction of my trade. I will not enter unless they tell me they're headed that way. And guys, this doesn't guarantee a winner, but what it does is it establishes your risk. Your risk is no longer down here. It's 2 ticks below that reversal bar. And guys, it doesn't mean that they won't come back to this area, but it means if they do, you'll just take a second shot from the next best area. And you will take a small loss. There's a price for confirmation, but there's an equally large price for not waiting for confirmation when it's just not perfect. And that is getting run over and blown out, and that's no fun at all. So, guys, this is your high probability trend trade. This is it. Pete, amen. Most good traders will tell you evaluate risk before profit potential. I think that's one of the biggest signs of a mature trader is that you manage your risk long before you ever manage your profits, guys. And Nexgen users, you're managing risk by insisting on odds favorable momentum, by insisting that the market is likely to continue in the direction of the trend. You're managing your risk by trading from areas rather than to areas, by insisting that there's a clear path or at least that solid potential to break. And you're managing your risk by waiting for the pullback to the areas inside of favorable large triggers where your stop is going to be the shortest that it can be. And then you start focusing on profits, guys. This is how you're going to study. And this is a great drill this weekend, guys. Every chart that you have in NinjaTrader supplied by Nexgen has 10 days of historical data. You can scroll back, and every time you see odds favorable momentum, either with the potential to break or a broken area, and one of these tails show up, circle it. We don't trade tails. We don't wait for the tails to form. We're all the way up here by the time they do. But what you'll find is at the bottom of that tail, if it lines up with an area inside of triggers, well, you have a trade opportunity. Go through and commit this look to memory. Take pictures. Write your rules on the chart, because the more times you see this, the easier it becomes. So let's see, just for grins, if we can find one. I'm trying to find one that's a little more of a clear path. That's pretty good. Let's see what this looks like, guys. That's odds favorable momentum. That's every trigger below, and we haven't reached an area. That was about 3:23 in the morning. I wasn't awake yet. But it pulled right back to the mid band, right inside of those triggers, and it overran it by 3 ticks, maybe 4 ticks. And then it continued down. Pretty awesome, right? There's your pattern. That one pulled right back to resistance at the bottom of triggers. Let me put a circle on it. So all we're doing is trading patterns, guys, and patterns that have been proven to win more than they lose. So right now on the S&P, do I have strong triggers or weak triggers? Give me an S or a W in the room. Strong or weak? What do you guys think? Strong, absolutely. Jeffrey, why do you say weak? And this is why I asked this question, guys, because this is important to me. I'm going to take a picture just like that. Wayne, we're not talking about anything but momentum right now. And you're right, but we're not talking about anything but momentum right now. So I'm going to do this real quick. And guys, this is why. But Jeffrey, all we're looking at is the first bar. What do we have? Don't worry about this. Don't worry about these. These mean nothing. All we're looking at is trigger lines, right? All we're looking at is trigger lines. Smalls below the large. The large are wide. They're angled in the direction of the trend. Let me capture a picture here. And let's put these side by side. And let me ask you again, and this is why pictures, guys, are so important. Whoops. I'm going to put straight out of the materials right next to the pictures. Guys, do I have strong trigger lines on my large chart? Do I have the advantage of momentum? Veronica, do you see it? Edwin, do you see it? Izzy, GOJ, Hamid, Muser, Vittorio. That's rad, isn't it? That's it. That's 100%. That's momentum. Do I have a clear path? Wayne gave it away already. Do I have a clear path? Not yet. Smalls are below with odds favorable momentum, but the large are still above. Ladies and gentlemen, this is one of those 50-50 trades. This is one of those medium probability trades. This is not a clear path. Divergence means loss of momentum, doesn't it? So if I don't have a clear path and I'm losing strength, this may not be the best of the best for me, ladies and gentlemen. It just might not be. So that's how the read starts, guys. And then either the rules are met or they're not. But you've got to commit these looks to memory. You've got to know what it looks like to have your rules met. And that's where this first handout comes into play. Chart Reading 101. Guys, I put this together. So this is for all of you that are learning to read your charts. This is for all of you that make quick little mistakes, right? I can't catch it in the moment. To get to where you want to be, you've got to understand these looks quickly. You've got to be able to pick them out instantly, right? Take 25 pictures of strong triggers and weak triggers. Know the difference between the two. Take 25 pictures of a clear path and termination conditions. Know the difference between the two. And if you do this, there's no doubt in my mind, you'll never tell me that there's strong triggers when they're weak, and you'll never convince yourself that the path is clear when it isn't. So, guys, it feels like a lot of work. Making $1 million a year is a lot of work, I'm told. Strong triggers, weak triggers, clear path terminations. Get those entries, guys, but you've got to talk about why. You can't just take a picture and forget it, right? You've got to say something crazy on that picture, like everything is red. The smalls are below the large. There's space between strong triggers, odds favorable momentum. This is the exact same look almost that we just had, right? Let's commit it to memory when there's not the pressure of a trade. so that when we actually have to go do a little chart reading, we know exactly what we're looking for. And if you need a little help with this, guys, high probability trend trade checklist, I'm giving you this right now. This goes through the entry rules and it gives you a picture of all of them being met. Is the market coming from a strong top or bottom, guys? That means that there was a termination. You have to know terminations that reversed the market. And then all of a sudden, this is a strong bottom. Strong bottom's the precursor for the highest probability trend trade long you can take. Do I have momentum or is it weakness? Is it a termination or a clear path, or is it one of those crazy 50-50s where it's only potential? And where the heck do I put my limit order? And how do I decide where the market is most likely to continue? All of this is right here for you in pictures. And then I'm also giving you the trend trade checklist, guys. This is the rules with the addition of that strong top or bottom, which is not mandatory, but it does create a lot of warm fuzzies. Never had anybody mark yes to everything on this checklist. Truthfully. Let me say truthfully. And do worse than 70% in their trading, guys. This is the high probability trend trade. This is the language that you should put on your chart because you want to take these words and associate them with a look, guys. You should print this out. You should find your biggest, fattest marker, and every time you're looking to take a trade, you're talking yourself through advantages. You're going to get that. And then the KISS plan. I love the KISS plan, guys. And the KISS plan came to be because some guy told me that he couldn't find trades. All he could find was losers. And it turned out he was looking for about 173 different trades, guys. This KISS plan is a stepping stone. This is your first trade, not your only trade. But this plan is designed to optimize your chances of success with the high probability trend trade. This plan has taken brand new users to getting funded in those prop firms within their first 30 days. Guys, this plan is going to teach you to read your indicators. Hey, good morning, Miss Cindy. Through simulation, through study, through class feedback, and through continuous practice, ladies and gentlemen, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Once you can recognize advantages, you will see opportunity outside of this trade. Once you can read your charts, you're going to find more ways to make money with this software, guys. We are laying a solid foundation right now, and that's all we're doing. We're focusing on the process. So your simple plan for consistency. Don't fight the large chart, Jeffrey Dean. Don't fight the large chart. Don't fight the momentum on the large chart. Don't fight the areas on the large chart, guys. That is what we call a recipe for financial suicide. How to Commit Financial Suicide. One Easy Step by John Novak. And because my brother likes to think about things too much, there's actually 2 steps. We need a revision. I should have been his editor. Guys, chapter 1, warning signs your friends are in trouble. They are trading against strong triggers. They are fighting the momentum created by the large crowd. It's difficult to win against that momentum. I'm not saying it's impossible, but it is difficult. Chapter 2, warning sign your friends are not paying attention. They trade into termination conditions. They trade into lines that may stop the market. You know exactly where those lines are. And to be honest with you guys, you knew where they were long before you got to them. Look at this large chart. If you were long, you knew exactly where the market may create a bounce. And sure enough, it did. If you were short, you knew exactly where the market had the potential to stop. What an amazing freaking place to take profits rather than try to trade into. And that's that likely to continue, knowing where it may go, guys. Don't commit financial suicide. Go with the flow. You're either doing nothing or you're trading with the large crowd, guys. Define your entry. Make it your entry. Own that entry. You're going to see people take trades in this room that are not your trades, that are not high probability trend trades, that don't even make sense to you. Don't worry about those people. Chances are they're never going to send you a check to pay your bills. They're never going to put your kids through college, and you'll probably never meet them, so you're not going to get a steak dinner out of them. Guys, you've got to trade your plan. You've got to read your indicators. You've got to recognize your advantages. Define your entry, because great entries create manageable trades. And your entry is very mechanical in the beginning, guys. It's very if-then. If I have strong triggers, then I will make sure I have no termination conditions. And if I have no termination conditions, then I'll go to my small chart and look for an area inside of favorable large triggers. And if I have that, guess what? I'm in the market. So the same way that your entries are very if-then and very mechanical, pinpointing where the market is most likely to continue, guys, allow your management to be just as mechanical. Good morning, Ed. It's in the mail, man. Oh, that's funny. The financial suicide. It is a fictional biography. And guys, once you're in the market at the best of the best spot, once you've pinpointed where it's most likely to continue, once you've taken that amazing entry, your stop is 4 or 5 ticks above those trigger lines. And you're either going to get stopped out, cost of doing business, or you're going to get one of those magical reversal bars that's going in the direction of momentum, in the direction of the clear path, in the direction of your trade. And if you get the reversal bar, this is your first stop movement. If then, if I get a reversal bar, then my new stop is 2 ticks above that reversal bar for a short trade. It is 2 ticks below that reversal bar for a long trade. We're taking the emotion out of it, guys. And then there's nothing to do. You're either going to get stopped out, it happens, or your first target gets hit. And guys, if you don't get stopped out and your first target gets hit, your first target is only $100. Only $100 away from that entry, guys. And they typically get hit fast if they're going to get hit. And this is cool, because that is success, and success creates confidence, and confidence establishes trust. This is amazing because now you have money in the bank and your sweaty palms aren't so sweaty. Your wife or husband just came up, high-fived you, way to get paid, baby. I like the way you're doing this. And guys, you're going to move your stop to break even. You're going to say, you know what? I've got money in my account. I've got absolutely nothing to lose. Let me take just a minute and develop some trust in the large chart. Let me remind myself that the only reason I pulled the trigger in the first place was because of momentum and a clear path. And what you're doing is you are teaching your brain to sit tight, to hold, to wait for profits, to not let your emotions move stops and targets prematurely. And your second target, ladies and gentlemen, is only $200 from your entry, which means in the highest probability trend trade, with all the advantages, with the amazing entry, with nothing but mechanical, emotionless management, you just made $300, guys. And $300 doesn't feel like a lot of money to most of us. $300, whatever, I'll go to the casino, I'll lose it in 8 minutes, it won't bother me a bit. But $300 a day, every day, is $75,000 a year. And guys, if I lose 75 grand in the casino, I'm pissed, right? I'm learning how to get paid through the high probability trend trade. I'm learning to accept profits. I'm learning to not hope that the market continues in the direction when there's lines in the way saying perhaps it won't. And guys, I put this picture in the room earlier. When you know where the market is likely to go, it's okay to get paid there. There will be more. The goal of trading is to get paid. The goal of trading is to win more than you lose. The goal of trading is to not hope, wish, and want. So many people fail because they don't have a plan, because they don't get paid. So when you get through the practice, right, and you're like, it's time, I'm going live, let's take this show on the road, there's 2 things you got to know, guys. You got to know why you're going to enter a trade. In the beginning, it's the KISS plan. It's very well spelled out. It's been proven to win more than it loses. You're getting in because the rules are met. That's it. But then you have to know why you're going to exit. And here's the deal, guys. And I'm going to raise my hand too, because I was the king of the 1 tick trade. Management is harder than entries, because once you're in a trade, you have something to lose. Once you're in a trade, that little devil on your shoulder is going to tell you to hold for bigger moves. Or that little devil on your shoulder is going to tell you to jump out, because what if it turns against you and you take a loss? So keep it very mechanical and have very deliberate rules for why you'll enter and why you'll exit. And then commit to having those rules met. Practice following your rules, because your rules are patterns that have been proven to win more than they lose. The more consistent in action you can become, the more consistent in profits you'll likely to become. Guys, your process yields the results. Rules help remove emotion associated with trading. Guys, I have been a mess. When I first started trading, if I entered the market, and it's funny to think about it now, it really is. And some of you may identify with this. If I entered the market, and I'm just going to jump in arbitrarily, this is not a trade. I would start scaling charts and I'd start moving things and going here and I'd do this and oh my gosh and I don't know what I did and now I'm going to do this and oh I think it's going to go against me. Let me get my target right there but hold it. Let me make it break even. And then all of a sudden I'm out of the trade and not a damn thing happened. And I'm just like, ugh. And guys, it's exhausting. So you've got to learn to follow rules from the get-go. You've got to focus on following rules. You've never done that, ever. Nobody but me has ever done it, guys. So if you're in a high probability trend trade, what's it take to get you out? The KISS plan initially, right? Keep it mechanical. Learn how to manage your trades. But then you're going to see more. And then once you have this trade down, there's your second trade with different rules for entry, different management. And then there's your third trade with different rules for entry and different management. And there's your fourth trade with different rules for entry and different management. And guys, that's a lot to think about. So keep it simple in the beginning and you'll be glad that you did. And ladies and gentlemen, that is my first hour and we actually made it under the wire on the hour. That is the first hour of every classroom that I teach, guys. I'm a firm believer that recognition comes through repetition. And the more you study the individual pieces, the easier it is to catch the trade. The more you take pictures, the easier it is to slow the market down. So I just dropped in the room. I dropped in, what did I drop in here? I dropped in Chart Reading 101 because Chart Reading 101 is going to get you focused on becoming a chart reader. My spreadsheet's in there again to make sure that you can go and steal all those great looking trades on my section. I have put the high probability trend trade checklist in there so you know exactly what it looks like. And you also know you have a checklist to print out to put on your desktop. I've given you the KISS plan so that you know exactly what it's going to take to get you into the market as a brand new high probability trend trader. And here's the cool thing is once you're good at it, boom, pow, there's that 50-50 trade. The best way to take it, guys, the highest chance of success for the 50-50 is when you come from a strong top or bottom. So if you didn't learn that from the first trade, you're going to struggle with the 50-50. The best way to take a 50-50 is odds favorable momentum on both large and small chart. And if you didn't learn that lesson from the high probability trend trade, you will struggle with the 50-50. And it says no divergence. This is the biggest killer of 50-50 trades. Pete said there were 7 of them on the S&P during that 50-50 look. No divergence on the 5-1, guys. Optimizing your chances of success. This is so important. It's in red. But then you've got to be able to take an entry at the area the same way you do on the high probability. And then it reminds you, divergence, no trade. And then it reminds you in management, great googly moogly, get out of that trade if there's divergence. Can anyone guess what the absolute biggest slayer of the 50-50 trade is? The one that makes you guys lose more than you win? Anybody have a guess? Just maybe a hint, possibly? Divergence. Amen, Jen. But what do you guys suppose nobody pays attention to when it's 50-50 as a brand new user? Divergence. And then you lose. And that's what we call avoidable losses, guys. When you break a rule, that's an avoidable loss. 50-50. All the divergences, I'll be damned. That area hasn't really broken. I don't have momentum. The colors don't match. And not one of you had to lose money on these split triggers. Not one of you had to go short against all these divergences. Kind of cool, right? That's the whole idea, is to make it easy. If you said, you know what? I'll wait for a reversal bar because my triggers are split. At least you gave yourself a fighting chance. Show me pictures, Jeffrey Dean. Show me pictures. One of the things that happens, and Jeffrey, I'm not picking on you, brother, is people love to post in the room, I just lost. People love to post in the room, I'm getting my ass kicked. People love to post in the room, it's just not working out. But what they don't do is post their trades in the room. Because sometimes you guys take the best looking trades ever, and it's a cost of doing business, but you spend the next hour pining about your loss instead of embracing the fact that you followed your rules. Guys, this trade will lose every now and then. Post it in the room. Talk about what you see. Get the feedback, guys. I'm going to drag today out a little bit because really none of you guys can stop me, right? Ha 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 ha. To minimize your learning curve, let's make this bigger so the people in the back row can see it. To minimize your learning curve, guys, post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. You guys will hear me tell you that you got lucky. How are you going to know the difference? You need feedback, guys. I'm here to help. I'm here 15 hours every week, live, to talk about everything that you see and do. And if you're on Simulator, if you're participating in class, you can't lose money. You can't lose money on Simulator. You can't lose money by participating in class on Simulator, guys. There's no risk. You just need someone to tell you what you did right or wrong, and then more importantly, how to fix it. And this is the educational magic, guys. This is what we do. This is one of the pride points for Nexgen, is our ability to give you feedback. Our ability to help you read your indicators, and our ability to give you a solid plan that wins more than it loses, guys. And I'm telling you, we've been doing this for 28 years. It works. Follow the path. And then that's my first hour. It's my first hour every day. Sometimes you'll get odds favorable momentum and no pullbacks. Bummer. That's the NASDAQ, guys. The NASDAQ is terrifying for new users. But even on a market this fast, look at that. Didn't break, didn't break, didn't break. I actually took this picture earlier today, I think, and sent it to my brother. Look at this. Rule 22222. Defining the area that needs to break to find a trade. My brother loves the NASDAQ, and next week he's going to introduce a lot of you guys to the NASDAQ. I'm going to tell you right now that if you don't know your rules and you can't pick them out of a lineup instantly, the NASDAQ will absolutely eat your lunch. Absolutely eat your lunch. Cindy's got a new smile on her picture. Love it, Cindy. Don't brace for him. He's going to kill me if he watches this video and hears it. Guys, my brother has 28 years. Gil, my brother is going to show you guys that there's more options outside of just what I teach. I teach the basics. I teach the path. There's people in this room that are ready for the NASDAQ. You've got to be able to tell yourself whether or not you're ready for the NASDAQ, guys. If you struggle with rules, if you struggle with consistency, if you're not where you want to be, the NASDAQ probably is not your market. But it doesn't mean that there aren't great lessons. So Gil, listen. Just because you hear it doesn't mean that you have to do it, guys. That's what I want to tell you. Just because you hear it doesn't mean that you have to do it. Just because you see someone else do it doesn't mean that you have to do it. But I'm going to tell you right now, guys, my mentor is John Novak. I don't trade anything like John Novak. I don't have his pain tolerances. John Novak's the guy that looks at a chart and in a fraction of a second says, hell yeah, there's my long. Instantly. And you're like, whoa, where did that come from? And while I'm still reading charts, he's already up $300 because he's been doing this for 28 years. So guys, latch on and listen, but it doesn't mean that you have to incorporate everything that he teaches you right now. There's a lot of ways to make money. Get your basics down first. I'm going to take a break. I am going to go stretch my legs, to pet my dog, to, I don't know, maybe I'll text my wife, tell her she's pretty. I will be back in about 5 minutes. When I come back, we're going to look at the charts that you guys have posted. And guys, the one thing that I'm going to do is I am not going to beat you up or critique you. I'll tell you if you got lucky. I'll tell you if you're trading in determinations. I'll tell you if there's a better way to do it. But we're going to take each and every one of these, every chart posted, and we're going to talk about momentum, clear path, and an entry area. I'm going to praise you and lift you up when you do great things, and I'm going to correct you if you made some mistakes. And I'm going to not just go, wow, you screwed that one up, Jen. I'm going to say, hey, Jen, here's how you fix it. Here's why you didn't need to wait for confirmation. Here's why trading into that area may not be your best chance of success. And Jen's going to get sad, and she's going to put scotch in her tea, and she's going to yell at the dogs and pretend it's me. But tomorrow, she's going to be a better trader. And that's really the goal every day. So guys, go stretch your legs real quick. It's hard to sit in front of a screen for hours and hours and hours and hours. I'll see you in 5 minutes, guys. Smile lots. And Pete is absolutely right. John Novak isn't as warm and fuzzy as I am. He's really good at what he does, but it really is. It's like learning string theory from Einstein. He's smart. And he's fun at a party, which is pretty cool because that doesn't always happen. That's not always the same combination. All right, not a lot of pictures today. Jeffrey got us going. And guys, this is one of the reasons when I talk about annotations. And Jeffrey, I'm not trying to put you on display here, but this is a good one. So 6802 had turned into a third divergence, but I set my limit 10 ticks down and wrote it to the synthetics where I saw a reversal coming and made a few, focusing on better entries. And I love this because third divergence never happened. It was just potential. And you saw a reversal coming down here, but it never came. Does that make sense, Jeffrey? You tried to predict a couple different things. And honestly, I think I made some money after your predicted reversal to the short side. So guys, keep it pretty simple, right? Go through and in the very beginning, your annotation is going to help a lot with repetition, and your annotation is going to make things repeatable for you. So if I go through and I annotate this chart, I'm just doing this, guys, because we finished the first hour quick and we had a lot of time. Small triggers are above the large triggers. Every time I annotate a chart, I want to ask myself, do I have strong triggers? And I want to answer truthfully, yes or no. And then I want to go to the second rule, guys, and I want to do this. This is my process every time I look for a trade. Do I have a clear path? And I have to say no, it's 50-50 with the potential to break. So let's do that. So the large chart, I want you guys to see this. Large chart says up. Large chart says strong up. Large chart has the potential to break areas up. Does this make sense, everybody? This is my large chart read. Is there anybody that isn't with me on this? And I'm pretty good at this lesson because I needed this lesson for a long time. Everything about this large chart says up. The trend, the momentum, the potential to break, everything. And there's the short trade. No worries, Pete. It's early, man. It's only 9:15 Central. There's plenty of time in the day. And guys, this is where forming opinions. Jeffrey made some money on this one, I think. I think it actually went down a little bit. Maybe he made 10 ticks on it, which is cool. But when we talk about getting lucky, when we talk about fighting everything, you know, my brother had a broker once, and he said, hey, Mr. Novak. They probably call him John. My brother's pretty laid back. He said, John, you know, I can guarantee you $1 million in your trading account by the end of the year. And of course, my brother says to him, man, that'd be awesome. That'd be awesome. How do I end up with $1 million in my trading account at the end of the year? And the broker, very matter-of-factly, told him, I want you to fund it with $2 to $3 million, and I want you to fight that trend every chance you get. And you should be down to $1 million at the end of the year. And guys, it's so true. And Jeffrey, I'm glad that you pulled one out, and I'm thankful for the horseshoes when I make mistakes, because I make mistakes too. But if you let the large chart lead the way, and Jeffrey, if you said this out loud, if you said, all right, my large chart says up and it's strong and there's potential to break up, you should never have a moment where you feel like a short trade is your best chance of success. Does that make sense, everybody? And this is why annotation is important, because initially you're going to do it after the fact. Because adrenaline's going to take over in the moment. And you've got to be able to go back and go, whoa, that may not have been the best one. But what you will do is you'll get to the point where in a live market, you say, all right, I've got a little momentum to the upside. my smalls are trying to break outside of the large. They're not weak. And I've got the potential to break 61. And you know what? With this look, if I get a pullback, I've got the advantages to say, hey, maybe I'll try that long trade. Right at that area that just broke, with this area having the potential to broke, with these small triggers, smash through. Yeah, Jeffrey, that small chart is the absolute siren song. It will talk you into bad decisions. It's that girl that tried to run you over, but you dated her a second time because, gosh darn it, she's pretty. That may be based on a true story. Does that make sense, everybody? Talk to yourself out loud about the advantages. Say it out loud. Define the direction. Define the momentum. Define the path, right? And the words that fall out of your face should be enough to get you trading the correct direction. It should be enough to get you trading the correct direction. Jonathan, you got a strong trending market. Everything's cranking up. Just no room to go anywhere in this trade. You made a couple bucks on it. And guys, this is one of those times where I don't mind telling you. I like it. Small chart is the biggest culprit for fear of missing out. Amen. If there weren't so many darn lines, Jonathan, I could get on board with this one. But you already had divergence straight from a termination condition. And this is one of those ones where you're understanding that every trade isn't a home run, that you're understanding of exactly where trouble is, that you're understanding that when every trigger's going up, it's got a good chance of retracing. You took this one about as great as you could possibly take it. But these are the ones where it could just go down. It could keep going down. That's a pretty big termination condition. I actually got paid right about here on this trade. That was one of my long trades. And I think that's where this picture came from. Trading to the areas, right? Just getting in and getting to the areas and then getting paid at them. Wait for the next one. Let it be perfect again. Let it break. And there may have been something up there. Great job though, Jonathan. Trading with direction, guys. Trading with strength. Not every trade is a high probability trend trade, but you will be floored at the opportunities that you see out there once you start to read your indicators. And Jonathan, you did a great job on that one. Odds favorable. Ooh, I have to disagree on the clear path. So Wayne, price reached a divergence high. Not one trigger line's broken through. That is a termination. That is a 100% termination. So you do have momentum, but you're into a termination. Your entry makes perfect sense if that pink line isn't there. You're able to capitalize a little bit. And then it rolls over. And then once everything rolls with all that momentum, there's the up, there's the down, beautiful momentum trade, and you get paid on the way down. So you took a shot into the term. Momentum, once again, guys, momentum is helpful. Great entries create manageable trades. And I just point this out because you said it was a clear path, but it actually wasn't. Nice trading, Wayne. And I love that you made a little on the way up, and when it fails, you absolutely crush it on the way down. Nicely done. All right, Paul. Everything says down, potential to break with momentum. Paul says, I'm going to get in at that area inside of favorable large triggers. This is what it looks like when you guys are about to take a trade. Whoa. Why is it making me log in for this one, Paul? I just want to see the picture. Paul, maybe you can repost that one for me. All right, Miss Jen. Let's see what we have here. Strong top. Not quite. You're still 8 ticks away from that fib, Jen. That's a pretty big gap to call that a strong top. I would call that a weak top because it's not actually a termination condition. Does that make sense, everybody? In order to have a strong top or bottom, you must first have a termination condition. 1 tick off, I'd give it to you all day. 8 ticks off is a pretty big gap. Probably wouldn't call that a strong top, but it doesn't change the idea that you do have odds favorable momentum. And it doesn't change the idea that you do have room to the target, clear path. And you get in, and you get paid all the way to the fib. Nicely done. Where are you in? You're in at... Your first profit is 100? I can't see your entry price. Great trade, though. Right on. So when... I took the same one, I think. Very similar. Actually, you caught it here. I caught the next one down. So when you say first profit at 100... Is it because it's 2 contracts showing 100 on your P&L? Because that's actually 50 times 2 contracts. That's what that looks at. That looks more like a $50 trade. And then 100 on the second or add to the term. But who cares? You got paid. Total trade 160. Absolutely beautiful. I wouldn't be mad if somebody mailed me $160. I don't know why anyone would be mad over 100. It's a beautiful trade. Nicely done, Jen. And then I'm not going to skip this one. Look at that. How cool is that? Friday is pick day. Hot air balloons on your front deck every Friday through Sunday. That's amazing. Very cool. We get that where we're at too, Pete. When my wife takes the dog out on Saturday mornings, there's almost always hot air balloons above us. I still look up and just stare at them like I'm 8. It's still one of the coolest things. I don't think I'd want to go in one, but I like looking up at them. And I love the sound of the fire when they're making them go up. That's kind of fun. All right, Ed. New chapter. Don't let boredom make you trade poorly. So, Ed, you're saying that you shouldn't trade into termination conditions? Just want to make sure. That's probably a good rule. Avoidable losses. Any loss there is an avoidable loss. And you knew it wasn't right because you took a tick, and you took a tick, and you took 2 ticks. And you let it hit your stop, not a target, which means that you absolutely knew it wasn't right, and you moved your stop. Once you got 3 ticks into it, you captured 2 ticks. That's awesome, except commissions. Probably 8 whatever profit you made. All right, Miss Jen, no triggers through yet. Divergence times 2, not 3. Wait, Jen, split triggers. I love it. How many things can you find wrong with this picture? And Jen, it came all the way back to those large triggers that were a full bar away, didn't it? Didn't we just look at this one? Price reached the area, large triggers were a full bar away, and it closed that gap, didn't it? All the way back to the synthetics. Guys, this is what we call the gap theory. There's about 30 pictures of it on your spreadsheet. If price accelerates away from these large triggers, smacks into something, large triggers remain below that reversal bar marker. Price is likely to close the gap. And whoops. That's exactly what happened. There it is right there. And we never got our fill for the trend trade. The market's just patterns. That's all it is. Market does the same darn thing over and over and over. When you can keep emotions out 3 days, still an issue. It happens. Average losing trade's 100. Average trade's 47. But you're up money. Great job, Ed. Great job. 83% winners. Then you lose your mental discipline for 3 days. Bigger, same problem. Yeah. So one of the things that I know to be true, and gosh, people hate this, but it's so true. What I find for a lot of people is people get very excited about following the rules. And I'm going to share this, just personal experience. It's Friday. We're going to tell stories. For those of you that don't know, I spent 30 years in the service industry. I worked for a Tex-Mex chain that probably a lot of you have eaten at. And one of the things that was my job was to train new managers. As this company expanded throughout the Southwest, up the East Coast, into Chicago, they would fly people into Houston, and these people would train with me, because one of the things that I was pretty good at, believe it or not, was systems and routines, because that's how my brain works. And there was this deal where if you came to me as a brand new user, never been with a company, whatever, I would hand you a checklist, very much like this one. And you would be excited about being a manager. You're excited about the new job, and most people are people pleasers, and people would follow this checklist to the letter. And I had it written out where you need to be, what you need to do. And these brand new managers were coming through, and in their first 30 days, they looked brilliant, absolutely brilliant. And then they hit what I call the 30-day stupid. And forgive me if stupid hurts your feelings. Tape up, play hurt. And the 30-day stupid is when you start to feel confident, but you haven't gotten the repetitions to make it muscle memory. The 30-day stupid is when you start to ditch your checklist. The 30-day stupid is when you start to make mistakes, when you start to lose money, when you start to trade into areas, when you start to form opinions. And guys, it's a very real thing. 500-hour pilots do the same, Wayne, where you just don't need the checklist anymore because you're such a badass. And guys, it happened all the time, and it's fixable. And what happens is right around 30 days when these mistakes happen, what you have to do is you have to kind of take a deep breath and say, whoa, for 30 days I found success. For 30 days I was winning more than I was losing. For 30 days I was getting paid at areas. Why am I changing that pattern? Why am I changing that progress? Guys, and everybody does it, and it's human nature. But that's where you've got to kind of reassess where you're at, and refocus on the very basics. And that's why we always go back to basics in this room. I don't care if you've been with me for a day or for 1,001 days. It's the basics. It's the process that yields results. So if you make mistakes, and the whole reason I'm saying this, if you wake up one morning and you just suck, well, it's probably because you're good at reading your charts, and you're letting your chart read form opinions. Your chart read should be the reason that you know that your rules are met. And let me see if I think I did something on that. I write a lot of little things, guys. The whole English lit major thing. Hold on. Maybe I got rid of it. But one of the things that I wrote about was chart reading. And that chart reading is not trading. Chart reading is not rules. Chart reading is not a pattern that repeats more than... Chart reading is identifying that pattern to let you know that your rules are met. So focus on the reads, guys. Focus on the reads, focus on the patterns, focus on the advantages. And what'll happen is you'll figure things out. Jen, everything says up. We had divergence, also a term, happy for the risk to reward. And you said with this much momentum and the fib looming in the distance, you'll take a shot in between fibs, trading above the trouble, but trading to the trouble. Guys, that's not a big trade. That is 8 ticks twice. That's $160 again, which means, Jen, you've shown me $320 worth of profit in the last 30 minutes by trading away from areas and getting out at trouble. How cool is that? That's not a high probability trend trade, ladies and gentlemen. That is an outstanding way to take these incredible indicators and turn them into money. Nicely done, Miss Jen. I'm going to tell John to abuse you, by the way. You've had it way too easy with me. Paul, odds favorable, everything up. Hold on. I see the long here. Didn't work. That's a good look, Paul. Please tell him you don't exist. But can I say one thing, Paul? Can I use your chart as a little lesson for the kids? And you know this lesson. So this is for everyone else, guys. Paul did it perfect. Area inside of triggers. I can't even do the lesson that I was going to do. Rule number 1 says momentum. Momentum was insane. Beautiful. And then, Paul, your path was clear. Everything got up. And you had the perfect entry right at support inside of favorable large triggers. And I like the little momentum trade that you took. The little bounce, bing, bang, let's make a couple bucks. So this is the lesson we're going to get. Paul asked himself, do I have strong triggers? His answer was yes. Does everybody see it? Veronica J, do you guys see that he had odds favorable momentum? Paul asked himself about the path. He said, do I have a clear path? Does everybody see that the small and large are above trouble? Momentum, clear path, room to targets. Guys, this is the best look on the large chart that you can have. And then Paul, because Paul knows his rules, said, do I have an area inside of favorable large triggers? And guys, without question, he did. Did Paul follow his rules? If Paul is taking a high probability trend trade, did Paul follow his rules? Guys, what do you think? I'm telling you, this is the best lesson you're going to get today. Why not, Wayne? What rule did he break? He had momentum. He had a clear path. He had an area inside of favorable large triggers. Which rule broke? What do you guys think? And I want to hear, because just like Jen said, Mark, question on this chart. Do you ever concern yourself with the smalls rolling over a bit and turning red? Hell no, Jen. Do you know why? Because momentum is defined on the large chart. This little loss of momentum is what got me back to the best entry. Does that make sense? If you go through the spreadsheet, this is pretty cool. We did this the other day too. Oh, on the large? That didn't happen. That didn't happen until he was already stopped out. Absolutely not. I don't worry about it. Look at the separation between the two. And you'll see this a lot on the large chart. Let me show you guys. There's one of those little hitches right there, Jen. And if the market continues down, it'll roll red, but it didn't. Instead, it bounced right off a mid-band right there, and off it goes. No, that's okay. And sometimes you get the little hitch, but the space is there. So we're looking at the bar that creates the entry. And guys, his was textbook. Everything about this trade was beautiful. Momentum, clear path, entry area. And this is where you guys will begin to pick yourselves apart. And you'll say things like, well, this one didn't work. And Jen, I know this isn't what you meant. Because the small triggers turned against it. Because of divergence. That's his stop, Richard. He got stopped out of a long trade right there. He might have gone short right there. I'm not sure. But that's where he got stopped out of the long. And then Paul, it was, right? It was the perfect trade. But here's the lesson. Mathematicians, help me out. Anything that wins 70 to 80% of the time, how often is it going to lose? Is anybody solid in their math? 20 to 30. It's a cost of doing business. But what I find is that when you guys take this loser and you don't post it in the room, you'll spend the next hour pissed off that this trade didn't work. You'll spend the next hour angry as hell that you just got stopped out. And then you'll go long again and again and again and again and again, all the way down to revenge trade, right? The market doesn't care if you're pissed off, Paul. The only person that's using up any energy on it is you. That's when revenge trading happens, guys. And that's one of the reasons that either the rules are met or they're not. And Paul, I would stand behind this trade in a court of law. I would sell it to the magistrate and say, guys, this is a freaking amazing trade that didn't work. Why didn't it work? Because the sellers pushed harder. That's it. That's the only reason. But that's one of the cool things about posting in the room, guys. What a great trade. It just didn't work. They wanted to go back to the fib. And time to move on. Amen. And Paul, you were always the absolute best about posting next in the room. You would post that trade, and the next thing that you would post in all caps is next. Let's wait for the next one. Let's get them next time. Let's take that next perfect trade. Great stuff. Would take that trade all day long. Wouldn't hesitate. You couldn't keep me out of that trade. And then Zorro, yours looks a little different though. You had a really big fib right there, right? So you had a 50-50 and you had divergence on a 50-50. Do you guys remember when I said what's the biggest killer of a 50-50 trade? What is the biggest reason these things don't work out? It's divergence. That loss of momentum, because your path isn't clear and now we're giving up a little bit of momentum. And I haven't done this in a little bit. Let's do this one. I'm going to take a picture of this. And guys, I'm doing this. I think you guys should take this picture and print it out. Maybe do a little Photoshop on it so that it's black and white. This is great for new users. So if I print this out on my desktop and I put 3 pieces of paper on my desktop and I say to myself, do I have momentum? It's either going to be yes or no. And if it's no, then I've covered up one of my advantages, and I'm learning to speak to myself in terms of advantages. Do I have a clear path? Yes or no. I know what I'm giving up getting into this trade. Do I have an entry area inside of favorable large triggers? So guys, this is how medium probability trades work. If I am without momentum, does it stand to reason that I should insist on a clear path and an entry area? Does that make sense? So if I'm talking to myself in terms of advantages and I give one up, I know which other 2 I don't want to let go of. A 50-50 trade means that I let go of the clear path. And if I let go of the clear path, doesn't it stand to reason that momentum and an entry area are the 2 that I refuse to sacrifice? Do you guys remember what divergence is? It's a loss of momentum. which means that if I have divergence on a 50-50 trade, I have essentially let go of that one. And now I'm down to 33% of my advantages. Does that make sense to you guys? This is why I think talking out loud, this is why I think really focusing on advantages. Where am I at with it? Is it great? Is it okay? Is it meh? I don't know. And the market is like the weather. You can't change it. You can only follow rules. Go outside when it's sunny, right? Bring an umbrella. Great stuff. I like that, Wayne. Absolutely, Tim. Do I have a picture? Have you met me? I have every picture. Let me show you my favorite one on the loss of momentum. Oops, let me go back. I said oops. You guys can't see what I just oopsed. So check this out, Tim. This is one of my favorites. I'll drop this in the room too. This is the life cycle of momentum. Well, let's do this first. Let's use trigger lines to define it first. Strength, weakening, weakness. And then when we talk about divergence, Tim, every time there is a divergence, let me see which picture I want to use for that. I know which one we'll use. So every time there's I'll just take a picture of Zorro's here. If the market goes down and up and there's a loss of momentum, divergence prints. It's a loss of momentum that creates this blue line. It's a loss of momentum that creates this pink line. So every time I see divergence, Tim, I say to myself, there's a loss of momentum. On a small chart, if my large chart is 100% solid, if I have momentum, if there's a clear path on the large chart, a loss of momentum doesn't faze me, not in the least. And it actually takes 3 losses of momentum on a small chart to keep me out of a high probability trade. But if I'm already forfeiting the clear path, Tim, one divergence can ruin my good time. One divergence can push it beyond my entry. One divergence can keep this area from breaking. So this goes back to the idea that you have to understand what kind of trade you're getting into. If I'm getting into a high probability trend trade where each rule is met, the only thing that's going to keep me out of that trade on a small chart is 3 divergences. But once I give up my clear path, my rules change. And one divergence can be exactly what it takes to kill it. Does that make sense? Awesome. I love it when people say, ah. I love the aha moments that happen. Great question, man. Great question. Thank you for asking that. All right, Jay, let's see what you did, brother. Small trade, thought you were going to lose on the pullbacks. All right, so Jay, 2 things. Large chart says up, right? Large chart has momentum. Hell, large chart's almost got a clear path. Jay, that's about perfect, isn't it? So far, so good. You with me? So why did you enter here instead of here? That would be the question. Because this doesn't tell me much. Why did you enter here at the top of the move without momentum instead of waiting for the pullback? Okay. Large chart said it's time to look for an entry, right? I agree with you 100%. Large chart said let's look for an entry. That's the one. That's the one with the least amount of risk. That's the one with the highest profit potential. So great job holding it. But the pullbacks get you to your entry. right? And as long as price is staying inside of these triggers, when we teach entries every day, your stop goes below the trigger lines, right? Because once it gets below, we don't know what's going to happen. And it never really gets 4 to 5 ticks below. I know. Well, but I asked the question, why? Large chart says look for an entry. Large chart doesn't say, hey, look, the rules are met, jump in, right? The old JTFI, jump the fudge in. There's still entry rules, Jay. There's still rules that get you in at the best spot, 100%. Now, I'm not opposed to a jump in trade, not in the least bit, and I don't want you to think that I am. But here's the deal. If I'm going to jump into a trade, man, I'm on the right side of everything. And I'm screaming that direction. I'm not jumping in with my small triggers rolled over below my large because there's not the momentum to carry it. And when I'm weak over here, that's where you start to see those little pullbacks. Just a little something to help you as you move forward. I love the large chart. Look, just a little bit of patience on that small chart gives you a better entry with less risk. Nicely done, Jay. Thank you for posting. Pretty painless, right? Jay's like, but dude, I made money. Great exit. But how do we make money easier? How do we make money with less risk? How do we make money with more likelihood of success? And it's weird because you haven't been posting in the room for a week, and I'm not beating you up, and you do what you want to do, right? But guys, I'm here 15 hours every week, and the only thing that I want to do is help you. And I get that a lot, Jay, and that's maybe why I get a little passionate about it. Is I have people come to the room and they're, Mark, I've been getting the ever-loving shit kicked out of me for 3 months. And I always ask, why? But Jay, if you did it every day, right? If you did it every day, watch this. And of course, this one's going to go up. I was hoping this one would stop me out real quick. But if you take a trade like this, right? And guys, this is Murphy's Law just coming in on us. And you lose it. If you go long and you lose this trade. And if you post it in the room, we get to talk about the momentum, right? And we get to talk about the idea that there's not really an area to enter. We get to talk about everything that we see in all the chart reads. And I promise you, if you do it every day, and you have to listen to me nag, eventually you stop making the mistakes. And guys, what I've found, and one of my favorite things, is Jay, because you posted that one in the room, the likelihood of you waiting for the pullback next time goes up. The likelihood of you getting in at the area and the triggers goes up, right? So every day we get a step closer through a little conversation. And I promise you it works. I do this with my brother every day. Oh gosh, me too, Jen. So true story. If you look at my conversation with my brother, I'm just going to show you this. This is our gallery in Skype. Right here. I've probably got 10,000 pictures in my gallery with my brother. Every trade that I take, every entry that I take, every exit that I take, every management move that I make, it's like a police song. He gives me feedback on it. And you know what's cool? Is I give him feedback on his. And we work together through feedback, through mentorship, through chart reads, through understanding the plan to get better. So Jay, that wasn't just for you, man. That was for everybody, right? Don't be afraid. I really am. I'm pretty warm and fuzzy. I'm a people pleaser. I don't want to hurt anybody's feelings, but I also want to be very honest with you because I want you guys to find the success that you're looking for. I want you guys to say, man, when it's not a clear path, maybe divergence isn't my best bet. I want you to say that the potential to break is not a broken area. right? It's just not the same, and that's NASDAQ. And I want you to say, hey, there may be opportunities. Jay, there's the same look. Check it out, brother. When everything's going up, these damn retracements, but the areas are on the wrong side. But I'm not going to do that, right? I'm not going to mother scratcher you. I just want you to find success. So it's hard. And Jay, full admission, when I started, my brother taught this class. My brother wrote the software. My brother's been teaching day traders for 20 plus years. And he told me the same thing that I say in this classroom every day. Take pictures, know your rules, post in the room for feedback. And I refuse to. I absolutely refuse to. Well, and Jay, part of not having patience, and guys, I hope that this makes sense. Part of not having patience is not believing that that's the look that's going to get you paid. It's not believing that a pullback to support is the best opportunity. Not having patience is not believing that great entries create manageable trades, that momentum is a winner, that no divergence is your best bet. But the crazy thing is, Jay, and it's absolutely nuts, is the more pictures you take, the more pictures you study, the more times you see these patterns repeat themselves and produce winners, the easier it is to wait for this trade. True story. And then you'll have a day where you focus on the money and you get slaughtered, and you come back into it and you go, no, let me focus on the patterns. And you just learn to trust these. And there's almost 400 pictures of people doing great things with the software. And I just looked on this is actually my wife's when she was learning. You ever try to teach your wife something? Odds favorable, potential to break, perfect entry, money. Anybody can do this. This was like on her second or third day. So develop trust, right? And guys, one of the easiest ways to develop trust is to come at it with skepticism. Is to say something like, this is all utter crap, and I'm going to prove that it's wrong, and go back and circle those tails, and you just find yourself in this position where you're pretty good with it. Good morning, home. Smalls and large above, odds favorable, momentum, rules met. Clear path, no term in sight, rule 2 met. I agree 100%. Wait for the reversal bar to signal the start of the pullback. Amen. Large, synthetic, buy, enter 1 to 2 ticks above the highest point of support. Woo extends from the highest support to the lowest support inside of favorable arch triggers. This is where the market is likely to continue. Amen. Favorable arch triggers is not an issue. There can be a bounce at the term, mid-band, fib, 1 to 1. Perfect. Put stop 4 to 5 ticks below the synthetic triggers. First target, 1 point, not 1 point above the entry. Because 1 point on the S&P is only $50, Hong. So it's actually 2 points above the entry. That's your first target is $100. Move stop to break even when you hit it. Second target is $200. With no term or divergent in sight, move first and second target up. So Hong, doing 2 contracts, $100 on the first, $200 on the second is what the KISS plan says, right? That very basic learn how to manage your trades. $100 on the first contract, $200 on the second. That's the KISS plan. Which means that if you're in it at 60 or at 99, you're out at 01 and 03. Cool. And then Hong, you said, do I move them up? Right? Do I hold for bigger moves when there's nothing in the way? That comes with time. With odds favorable, in a clear path, Hong, what I like to do is I still like to get paid. This was me trading a 4 lot. And I got paid at 100. and I got paid at 150 and I got paid at 200. So I'm up 350 in this trade. I have absolutely no risk, and my large chart says the market is likely to go to the next fib. So there will be a time where you say, absolutely, I'll hold for that bigger move. And guys, yes, it did make it on this trade. I remember taking this trade. This was a fun one. Same way you do a 2-lot, you just double it. Your order quantity is 4, or your order quantity is 7, or your order quantity is 11. You can trade as many contracts as you want. But if you're not totally cool on the rules, if you're not totally cool on the advantages, if you're not comfortable managing trades yet, 2 lots plenty. Learn how to get paid. Learn how to get in at the right spot. Learn how to make money. And then you'll find more money. All right, let's see what we have here. Termination, strong top. Once it reverses, absolutely. Small triggers approaching the mid-band. No clear path. Rule number 2 not met. No need to look at smaller chart. Large triggers are red and synthetics are green. Avoid this. So Hong, it's not favorable large triggers, right? So I could never have an area inside of favorable large triggers. Can't ever have a high probability trend trade. The mid-band is only a termination condition. Let me find this real quick. The mid-band is a termination condition. I think we talked about this yesterday too. If the large triggers are a full bar away. So once again, I love that I can do this. Let me go to the spreadsheet. Guys, I don't think you realize how much information there is on the spreadsheet. Mid-band as term. Price reaches the mid-band. Large triggers are a full bar away. Hold on, there's another one. Mid-band is term. Price reaches the mid-band. Large triggers are a full bar away. So guys, learn the lesson for when the mid-band is a termination. Let's see if there's another one. This says large triggers full bar away. What is it? Holy crap, it's a mid-band. Large triggers full bar away. So honestly, Hong, where did the picture go? Did I miss it? I think I just accidentally deleted it. Sorry. So in this picture, the mid-band is not a termination. The large triggers aren't a full bar away. But you still don't have a great looking entry, do you? And sometimes it's just not your trade. Sometimes in the beginning, there's just not an opportunity there. But that's okay. There may be one day, just not yet. And then your final one, let's take a look. Large triggers above smalls. I love that you say that. Large triggers above small triggers, not small triggers below large triggers. Either way, it works, right? 50-50. Odds favorable, 50-50. Smalls smash through the fib. No other term in sight. Do I enter above or below mid-band or fib? So, Hong, let's use the language one more time. Dun, 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 dun. I like the stop placement. Enter at an area inside of fibs, right? Or inside of triggers, excuse me. So you've created your window of opportunity. This is such a good lesson. When this chart is absolutely screaming, we play the odds. Why not get in low? You know where your stop's at. Because with all of this momentum, we don't necessarily expect them to get up to the higher spot. They might. If they do, you know where your stop goes, and you're still in, and it's still a beautiful winner. So you get to make the choice, Hong. You get to say, thanks, Tim. Have a good one, man. Good to see you in here posting again. You get to make the choice. Do I want to get in low or high? If you wait for the high spot, don't you run the risk of missing it if it bounces off the low spot? Does that make sense? This is what my brother calls tripping over pennies to save dollars. Tripping over pennies and missing the dollars. So the rules say for the high probability trend trade, enter at the lowest point of resistance inside of favorable large triggers. Great questions. Does that make sense? And stop placement is perfect. And then once you get the reversal bar, the stop is way down here. And that thing doesn't even blink until you hit a fib. Good stuff. Great pictures. Great questions. Thank you for those. Below the lowest point of resistance. So watch this, and let me just find an example. And we'll do this. Actually, you know what? Let me see if I can find a picture. So, Hong, if you're throwing a ball against a brick wall, let's see if we can find a picture right off. What are the chances? A lot of fitness pictures here. Come on. All right. This is a good one. All right. Here's my wall. Let me make that a different color. Hong, do you expect the ball to bounce here? Or do you expect it to get through the wall and bounce from back there? Is it going to come off the wall, or is it going to bounce from beyond the wall? And I think this is one of the best analogies for me, because the wall makes sense. Equal opposite reaction, physics, right? Once it gets to this side of the wall, shoot, it might just keep going, or it might fizzle out and go down here. So I think of these areas as walls. They're like walls to create a bounce. Where is that picture? Oh, I did that. So that's my first wall, and that's my second wall. So I put my entry in front of the wall, because what I want is I want it to get hit, and then I want it to bounce. I don't want it to bounce before I get hit. Great question. Great question. I love all the questions. Good stuff. And guys, we made it to the 11 o'clock hour. The S&P missed it by 2 ticks. No areas inside of triggers, so really no reason to take that trade, because once we get to the wrong side of the triggers, who knows where it's going to stop. Never had momentum. I can't go short. I can't go long. And look at that indecision on the small chart, guys. Do you see this? This is the fight between buyers and sellers. You don't have rules, Matt. And that's them fighting it out. One of them's going to win. You could guess and hope you're right, or you could just let one of them win, and they either give you momentum up or momentum down, and then we'll start looking for trades again. So, guys, I'm going to run a lap, stretch my legs, grab a drink of water. When I come back, the last hour belongs to you. When I come back, you guys are running the class. So you're going to tell me what to talk about. Otherwise, it's going to be this crazy, awkward silence. So think about it. If you have a question, post it. If you have a picture, post it. If there's something that you're working on and you need help with it, post it. If you've got the cutest dog ever, post it. I'll be back in 5 minutes, guys. last hour, Friday, next week's vacation. Put me through the ringer, guys. Ask me some tough ones. Jen, what you got? Term. See, this one I'll give you. One tick off, dig it. Strong top, mid band, fib, full bar away. So many reasons not to take the short there, right, Jen? Great picture. Telling you guys, pictures are where it's at. Jen, how much money did you make on this trade? Or how much money did you lose on this trade? Not a darn thing, right? But everybody in the room's just a little bit smarter because Jen took a picture of her rules not being met. She knows what it looks like when it's not time to risk her money. I love it. Nicely done. There's NASDAQ. There's that gap theory again. There's that gap theory again. Egads and little fishes. Let's see what happens. You're on the NASDAQ right now, Morgan. Why? What trades are you taking? So here's the problem. Can I give you the best lesson I can give you on NASDAQ? So you're going to force it? So Morgan, does it expire or do they just recharge you for the next 30 days? Who are you with? Apex? You found a better deal. All right. Cool. So, well then, it expires if you don't qualify it? That's interesting. Odds favorable, clear path. Drop a 50 lot on it. You'll either blow it out or qualify it, I guess. That's not trading advice. That's me being a smartass. Please don't take that as advice. Let's see, we have odds favorable. It was 50-50 at the time. You take the momentum style trade and you get paid. Nicely done, Wayne. Why is that the wrong one? I like it. Oh, we saw that one, didn't we? That's that same momentum trade from earlier. I still like it. Whew, I'm glad I gave the same feedback. That would have been embarrassing, right? Odds favorable, clear path when you took the trade. Waited for the small triggers to clear fibs, took the entry. JTFI, since the pullback was above the fib, you waited for it to get below trouble. Freaking love that. And just pretty easy. Didn't have time to move it. That's awesome, dude. Nice trade, Wayne. I'm stoked at just how quick you found your groove. That's pretty cool. All right. So Cheetah, why is it a strong bottom? Can I give you my definition of a strong bottom? Gold is fast and a little temperamental, Wayne. So for me, in order to have a strong bottom, Cheetah, I have to have a termination condition first. I have to have a fib or 1-to-1s or a divergence low that price reached and the triggers remained above or below. So in order for me to ever consider an area a strong top or bottom, it's really important to me that the market makes it to an area like it did here or here, and it was a termination condition first. Because what happens is when it doesn't make the areas. No, the turn isn't a termination. Not at all. It's just a pivot. It's just a pivot. So, like, do you see how it's not coming from an area here, Cheetah? There's not a fib, not a one-to-one, not a divergence, anything. And it comes all the way up to trouble, and then it finishes the move to the fib. This is what happens a lot when you don't have a strong top or bottom. But divergence, okay, I got it. Let me clear this up on divergence real quick. Dun, dun, dun. Cheetah, what is divergence? It's a loss of momentum, right? That's all it is. It's just a loss of momentum. You had a loss of momentum there, and there, and there, and there. And you've got the potential for it here. All it is a loss of momentum. That's it. That's not a game changer. That's not a deal maker or a heartbreaker. It's just a loss of momentum. And you'll see them all the time. But what happens, Cheetah? No. It doesn't have to touch a fib, right? It has to touch a magenta divergence line, or a cyan divergence line, or a fib, or a one-to-one. But the thing about these divergence lines, Cheetah, let me show you real quick. And maybe this will clear it up. Sometimes I think this is the best picture ever to help people with this concept. Let me get to it real quick. How is yours? I don't have one. Which one of mine are you talking about? These? Cool. So Cheetah, what you have going on right now is a partial understanding of what it takes to create a termination condition. I'm going to clear it up for you right now. So there's some very specific language that I use. You're going to dig this. And guys, I love this lesson. So Cheetah, price comes down, price goes up. This creates the pivot. And you don't get this blue line, Cheetah, until about right here. This is where this blue line actually forms. Is about 2.5 bars up, 3 bars up. That's when the calculations are done. That's when the line prints. So all you have is a loss of momentum right here. Does that make sense, everybody? And then for a termination, Cheetah, price reaches the area. And this is where language, I think, pays huge dividends. In order to have a termination condition, two things happen. The first thing is price, we'll just do this, reaches the line. The second thing, or the third there, the second thing is triggers don't break. So when divergence prints, price actually creates this line, not reaches it. Does that make sense? Because it doesn't show up until all the way up here. So this price action creates the line. And this is nothing more than a loss of momentum, Cheetah. But when price reaches the line and the triggers remain above, now it's a termination condition. And if that termination condition reverses the market, now it's a strong bottom. So what we run into is, on your particular picture, just a loss of momentum. If it comes back and reaches it and the triggers remain above, then it will become a termination. And if that reverses the market, then it's a strong top. Does that make sense? Okay is always one of those answers that makes me nervous. There is a PDF on strong tops and bottoms for you. And I'm going to open it up in the room as well. So strong tops and bottoms. So first we learned termination conditions. And the recipe's always been the same. If the price bars reach an area, the trigger line's still above support, below resistance, you have an area likely to stop the market. So this picture is a great example of it. First price reaches the area and it becomes a termination condition. Are you comfortable? You're comfortable with that idea, right? Here's your termination at resistance. Here's your termination at support. Price reaches the area. Yeah, cool. And this is kind of the precursor. And then once those triggers roll, now we're a strong top. Once these triggers roll, now we're a strong bottom. So even with the divergence lines, I'm not sure which other chart you're talking about. Did price reach this area, Cheetah? Okay, I'll go back to it. No, it didn't. Price created this area. This line wasn't there until right here. This line didn't exist. It wasn't there, Cheetah. All you had was red screen, right? Boom. See, that's why I think repetition is key. Let me open this back up. Where was your picture? There it is. It looked just like that as it was coming down into it. And that line didn't start to print until the market looked like this. That's when it actually printed. So it creates it. It doesn't reach it. And then if I go back, let's find some big charts here. Price creates the divergence here. This is a good, this is a beautiful example of it. And this is for everybody, Cheetah, not just you. Don't think I'm picking on you. Where did it go? This is probably the best example ever. Price creates this divergence line, and we don't see it until about right here. But you see how when it comes back to the divergence line and the triggers remain below, now it's a termination condition. And then once those triggers roll, now it's a strong top. Awesome. And that's one of those things. And the only reason I think strong tops and bottoms are important is because when you have a strong top, maybe 50-50s beyond it are more likely to work. Areas are a little more likely to break. So there it is again, divergence line. And now we've reached it. Triggers are above. This is just a timely lesson. Now I have a termination, and if it reverses the market, then it will be a strong bottom. Dig it. Thank you for that picture, Cheetah. Good lesson. Great lesson there. And then let me go back to the rest of it because I think I missed some stuff. Yeah. And you're saying wait for the reversal bar and bounce from the synthetic triggers. For a long, you're looking for a long though, right? Area inside of triggers, there's a long right there. And then maybe you don't have your synthetics on your large chart, Cheetah. So you should have a big fib at 2672.3, right where that market is stopping. That's directly into a termination condition. And one of the things on the large chart is the software is designed to put three different time frames on your large chart. The large chart itself, the 13.2, fibs from the 5.1, and fibs from the highest. Yeah, you should have synthetic triggers, but you don't. And I know that because I can see that 5.1 fib, but they're not showing up over here, which means that you're kind of flying blind on your large chart. You're not giving yourself as much information as you could have. 2672.3 should be right there. And it hit it, sure enough. It went right to it, right into it. And that's where the bounce started. So the first way to try to remedy that is right click data series and make sure that tick replay is in there. If it is, then you may need to reapply the template, and if that doesn't fix it, you may need to just rebuild the chart. But those synthetics pay huge dividends. They really do. Ed, 50-50 trade, right? Really wanted that 13.2 mid-band? Why? Why, Ed? That went exactly to resistance inside a favorable... Ed, directly to resistance inside of favorable large triggers. You tripped over pennies, my friend. Why the hell do you want the large chart mid-band? Entries come from the small chart. I'm telling you guys, understanding the language of the rules will pay huge dividends. Understanding that areas inside of triggers on the small chart are your entry, get in at the lowest because of the momentum. Ed, this is going to be the easiest one all day, man. You're in at 11.50, and right there you're up $100 every contract. Does that make sense? Got to learn and trust the rules, guys. Got to learn and trust the rules. Hey, we got Steve in here. Steve says, Ed, let me help you with that. Mid-band inside of triggers. Little different look going on here. What are you trying to learn about it, Steve? So let's do this. Okay. You know what I saw this morning? I didn't even realize it was there. In the Discord, let me copy it. I'll copy the link and drop it in here for you. So it's a confirmation thing, but there's the link to Market Flow that's in Discord that my brother put together. So Steve, let's talk about it and just on the different charts. You had momentum. You didn't have a clear path. Plain and simple. Rule number 2 is not met. Market flow is not going to shouldn't talk you into a trade, right? You had divergence into a termination condition. There's nothing here. There's no momentum. There's no market flow signals. It doesn't even help there. One of the things about market flow, Steve, and this aggravates everybody. Let me find it. Yeah, and you probably don't have the right market flow. Thanks for that, Wayne. But one of the things about market flow is it's a confirmation chart. Market flow signals when the rules are true, right? So if it's that white bar trade, the termination is true. If it's a trend trade, the rules for the trend trade are true before you're looking for that confirmation. And this would be the first thing that I say, Steve, is make sure that the large chart rules are true. Make sure that your rules are met. And then what market flow helps with a little bit is when the rules are true. Let's say that you have a trade into this termination and you're saying to yourself, man, this looks like a great area and this is a potential opportunity and I'm willing to take a risk on it, but I'm going to force my market flow chart to give me a signal before I take that trade. I'm going to let this chart give me a signal, and that way I've got my risk defined. And it's really confirmation. Let me use it to confirm momentum. Let me use it to confirm, maybe a less than perfect entry. It won't fix broken trades. Oh, thank you for that, Jen. I hope you have a great week next week. Learn lots, stick to your plan, and I'll see you in about 10 days. So use it as confirmation first, would be the best. How do you get limit to print on all charts? Wayne, all charts have to be set on the same account. So your market flow chart, if you look at the chart trader, it's not set to the same account, which is why you don't see anything happening on it that you see on the other two. So if I put a limit order here, whoops, you see it on both. If I'm not on the same accounts, you won't see it on both charts. But if I'm on the same account, you'll see it on both charts. Did that make sense, Steve? Use it as a confirmation first. Use market flow as a little bit of confirmation. Confirm momentum. It's not a magical chart. It doesn't create trades that aren't already there. John Novak next week will go extensive on it. Man, just be here next week. You've got the market flow guru himself. They are. The dots don't have any impact. And that's the thing, and this is why market flow is so damn confusing for people. My favorite picture. Sorry if this is giving anybody a seizure. Don't stare at it. He is, Gary. You missed the account? I had a feeling. No, you can't. It's just a part of market flow. There's information there, but... So this is what I tell people in the beginning. Watch this. Let me go to my S&P because I think I still have market flow on there. Take your market flow chart in the very beginning. In the very beginning, Steve. And go to your indicators. And remove everything but trigger lines. So every time your rules are met, every time that your rules are met, get in the habit of confirming momentum on market flow. And you can do that by turning everything off but the triggers. This is like the first step where I go, okay, if I'm going to look at my market flow chart, the only thing I'm going to look for is the momentum. So if I'm looking for a short trade, do I have momentum? Does that make sense? And then once I confirm the momentum, let me load it up. Once I have the momentum, then I'll say to myself, you know what? This trade was a little sketchy into those one-to-ones. I'm not sure how I feel about it. If I have the momentum on the market flow chart the same way I do on the other charts, maybe if I get a market flow signal confirming the area, if I get one of those arrows like that, do you see it? Then I'll take the trade. Pretty cool, right? So first I'll confirm momentum and then I'll look for signals. And it's kind of like this process. But Steve, you don't have the right template going on yours. Or maybe you do. You have the regular market flow. John's going to come in and he's going to teach and he's going to use a fast trigger. So when you go to your templates, you do have some white bars. Cool. This is the one that John teaches on. Nexgen 8 range market flow, 2 fast trigger lines. And this gives you a little quicker trigger, and he's going to teach you guys some stuff to use that trigger line for management and also to look for a potential entry. And the dots make the bars, absolutely, and the HVAs and all that sort of stuff. So, yeah, you'll dig it. I think you'll dig it. Everyone thinks that I'm anti-market flow, but I'm really not. I love the market flow chart. And I think that there's a lot of great things that can be done with it, guys. There's a lot of management opportunities. There's ways to use it. But the average user tries to use it before they're ready. You know, they've been racing go-karts for the last 3 years, and now they want to hop into 1,000 horsepower or something, and they're just going to go into a wall. So ease into it a little bit. And then Cheetah, here we go. Price reached the divergence low. The triggers are above. This is a termination condition off of the divergence that was created off of this pivot. Just one more little reiteration. There it was a perfect pivot stop out. I love it. And then here, Price got a little bit below. Divergence kills the 50-50, and off it goes. Pretty cool, right? I love it when I learn new stuff and it clicks. Oop, we already saw that one, Cheetah. And I think I'm up to with everybody. Wayne, did I get yours? Okay, yeah, we did get that one. Cool. And then Cheetah, that's the same picture. Oh, so open up your chart trader on whichever one doesn't have it and make sure that the accounts are the same. No, you're okay, Cheetah. No big deal. So you probably have maybe one on sim and one on an account, or two on sim and one on an account, demo, or something like that. So you want to make sure that the accounts are all the same. And if they are, when you get into the market, you're good. And if you change that account, it'll go away. So you have to just make sure that you're on the same accounts. And again, guys, that's not a real trade. I just made that up for illustration. They were on the same account. Bummer, Morgan, I'm sorry. And it's still not showing up. It's not showing you your entries or exits. Is it the same market? What is it you're trying to get? Are you trying to get this to print, or are you trying to get your entries and exits to print? So do me a favor. Take your 3 charts, open Chart Trader on all 3, and let me see them, please, if you don't mind. And Steve, there is every template that I have. If you just want to drop that in there. Just overwrite what you have. Yeah, that'll give you every template. I downloaded all the new indicators like a week ago. So you'll be up to speed on everything that Nexgen gives in the template folder. Hell, you might even have some extra special stuff that my brother gives me. There's no telling. Wayne, the only way I know that it doesn't do it is if they're not the same account, and I'm not sure why. I don't have gold. Let me open gold up. So Cheetah, the synthetic trigger in the big chart is just the large triggers. That's it. There is no synthetic trigger. There's only large triggers on the large chart. We call them synthetic when we superimpose these triggers onto the small chart. But that's it. It's just a large trigger. Does that make sense? All you have is a large trigger. There is no synthetic. That's it. $12.24, $12.24. It looks like we're a little different. Nope. You look very different, Cheetah. Do you clean out data every morning? You clear cache, tick, temp, recovery, all of those? Cool. When was the last time you built a new workspace? I do mine once a week, and I'm just trying to go through in my head. A week or 2 weeks ago, that could have something to do with it. One of us may have busted up data, and I'm not saying that it's you. It might be me. I like to, when I don't line up with my brother, I'll go to database management and I will do the reset and the repair. So it's tools, database, and I'll do these two right here, but you have to be disconnected to do it. And then you've got to reboot NinjaTrader to make it stick. And sometimes that gets my brother and I back in line. But I change my charts a lot. I go through, I rebuild them. I do a lot of stuff on my charts. And there's always the possibility that mine's the one that's broken, not yours. So if I reload all historical data real quick, maybe it'll give us a different look. I've got that one. We've got the same pivots and everything. You've got a divergence and a little different. Well, you still don't have your synthetics on there too, it looks like. You don't see. All right, so this is 80. This is native to my chart. That's a higher time frame. That's a lower time frame, lower time frame. This one's native. That one's a higher time frame. This one's native. You can always get with Jason too and just let him run through it real quick and make sure everything is cool. I love Jason. He's good. And if there's something broken, he'll find it, he'll fix it, and he'll fix it quickly. And sometimes, for me anyway, having that different set of eyes on it, it gives me a little bit of confidence. A little extra level of trust there for sure. Odds favorable, potential to break, divergence on a 50-50, guys. Do you see it? Let's see what happens from divergence on a 50-50. Oh my gosh, it blew right through. Isn't that cool? You guys knew that that's a deal breaker. And nobody had to take that loss. Pretty outstanding, right? Now we're at a mid-band and the large triggers are a full bar away. Gap theory. Patterns, guys, even on a market that trades this fast. The patterns happen. Termination, odds favorable, clear path. What do you guys think? My rules say get in a couple ticks above the mid-band inside of triggers. If I get filled, I know exactly where my stop goes. They sank a sub, dockside. Oops. Oopsie. Do you guys see it? Momentum is insane. What a great look. Path is clear. I've got one line inside of those triggers and my initial stop has to go 4 or 5 ticks below. Do you guys, does everybody see it? Does anybody not know why I would activate a limit order right there? This is what we talk about every day. Termination condition reverses the market. That's a strong bottom. Smalls above the large, larger wide. That is odds favorable momentum. Price has not reached Fibonacci resistance. Clear path. Can't put screen doors on a submarine. All I'm hopeful for is that it pulls back to the area inside of favorable large triggers. Well, Hong, let me draw a picture real quick before it gets there. So this is about 5 ticks, right? About 5 ticks to resistance. That's not very much. That's $50, Hong. Ew. But if I get an entry at 88, I've got 68, 10, 12. That's 220. Feels better, doesn't it? This is why we don't calculate from the top of the bar, but we calculate from where we're going to enter. So for me, Hong, I like to have at least $200 worth of profit potential on a high probability trend trade, because my second target is $200. And it just blew up without us, right? And now we have the potential to break. Wow, there it goes. Holy smokes. Not if you don't have a white bar, it wasn't. But that's kind of cool, Wayne. I didn't miss it. I knew exactly where it had to be, Hong. It had to be right here. They didn't come get me. The buyer said, nope, sorry, Mr. Novak, we're going without you. And you know what that means, Hong? That this move was not my money. It didn't fit my plan. It wasn't my trade. My trade happens at a mid-band inside of favorable large triggers. My trade doesn't happen jumping into right below resistance. And this is one of the very, very real things about trading, guys, is every move isn't your move. And sometimes it's going to fly. And you're going to wish you were in that trade, and you're going to wonder how you should have gotten into that trade. But if your rules weren't met, it simply isn't your trade. I knew where I needed my entry to be, Hong, and it didn't give it to me. I did everything I could. I waited for momentum. I had a clear path. I pinpointed my area. Those jerks just didn't give me my trade. So it's not my money. Cool. But that's a real important lesson. That every move isn't your move. But there's enough of them in a day that you don't need to be in every move to get paid, Hong. Dang right, says Joel. I love it. And look at that. Weak triggers right at resistance. Look at the bounce, guys. Does everyone see the bounce that happened at resistance with weak triggers? How cool is that? You guys knew where that line was. You knew that it could create a bounce. I'm sorry. I don't care how long I teach this room. This will always freaking amaze me. And what did it break this one with? Odds favorable freaking momentum. Isn't that awesome? From fib to fib. Hey, Morgan, have a good one, man. I'll see you in a couple weeks. Yep, Joel, it is Big Brother next week. Guys, if you are thin-skinned or prone to cry, don't be here next week. No, I'm just kidding. I kid. My brother is freaking amazing chart reader, and it will be impossible for you to walk out of this classroom not a little smarter. But commit to your plan, guys. Commit to your plan. Can't stress that enough.